Welcome back. So this panel is about investing in a decentralized ecosystem. I'm Mougayar. I'm the author of The Business Blockchain. I've also been an investor and advisor to a number of blockchain companies for the last 5 years. So we have a diverse group of panelists that kind of represents the mix of the new reality, including Andy, who is more of a service provider to ICOs, Brittany, who runs an early-stage venture capital fund, who is now investing into decentralized blockchain companies. Richard, who has a fund that is focused entirely on crypto and blockchain companies. And Ari, who came from the traditional fund space and now has a new fund that is also focused on ICOs and crypto. So I'm using this introduction to show that this is not a standard VC panel by any means. Because the main theme of the discussion that I've asked the panelists to talk about is really change. What's more important today is where we are going, not where we are. And we want to be reminded that the Stone Age did not end for a lack of stones. It ended because new technology came along. So this is all about new technology. So let's start with the big question, the first one, and we'll go from this way on, and then we'll go from there. So what has changed, really, now in venture capital with the advent of ICOs and decentralization? What are the main themes that you see have changed?
Yeah, absolutely. And first of all, thank you to Blockstack for having us here. Really exciting and an amazing conference so far. In terms of what's changed, I think of it as additive more than really replacing a lot of what venture capital does. Historically, protocols have just been too expensive to be funded by venture capital. And you've seen protocols built by academic coalitions or governments or occasionally really large corporations, but they weren't really VC fundable. And for the first time, what we've seen with ICOs is that a small team with a great idea can build a protocol and raise the money that they need to build that out into the future and have it be the protocol that is dominant. And that, to me, is the most exciting concept of what ICOs have done for the funding space, is not actually replacing anything that venture capital has done, but just giving an alternative way for these new protocols to be built from the ground up. And there's other pieces on top of that. I think where it starts to bleed into venture capital is when you start to look at kind of more application-level projects where the network effects of building a token on top of it give the company a massive advantage, and so they choose to ICO instead of raising venture funding. And I think we'll see as we move further into this year and into next year that securities tokens, equity tokens, will start to encroach on venture capital a little bit. But so far what I've seen is really that it's been in addition to what venture does as opposed to kind of replacing its core business. Okay, I want to come back to the point you said that these were not, could not be funded by VCs, so keep that thought in mind. Brittany, what do you think?
Yeah, I think ICOs definitely create a new way for project financing, which traditionally was associated with risk capital, which is what venture capital is. We take a lot of bets, and we know that 9 out of 10 are going to fail. So we only need one success to actually be rewarded as an early stage investor. But I think what ICOs especially do is they open up access for everyone to participate in the upside of some of these platforms. Traditionally, if you wanted to have upside in Twitter before they IPO'd, you had to go work there as an employee, which had a number of challenges. If you are outside in a different country, your valuable time, you can only pick one startup that you're working for. For this, you can invest in 20 different projects if you're a retail investor, which was never accessible before. That was only limited to venture capitalists. So I think that notion of ICO is really exciting, and it actually competes with venture capital, but I don't think it replaces it.
Richard, so why did you start your fund?
Yeah, good question. So my background, well, first of all, again, I'd like to echo the thanks to the Blockstack team. This is just a tremendous venue and great presentations this morning. And my background was in building companies actually in the kind of the internet age, and then sort of early in the cloud computing space, and then one that kind of covered both of them. And so I kind of witnessed what was referenced earlier, which was this kind of Gobi, this gap in protocol development between, say, the mid-90s and now. For us, this isn't like all overnight successes. It's not overnight. This is actually a continuity of the development of the open source movement. The power that brings in terms of how democratized it is, how collaborative it is across the world, and that when you add the token sale, when you add the trustless networks that you can deploy the open source software into, when you add the power to address the cold start problem with token economics, that shifts open source into what we see as the kind of fourth and golden age for open source, outside of the closed networks within which it's sort of generally trapped today. I'm super excited we're at the beginning of that wave. I must say I feel that we're right at the beginning of that wave of decentralized computing. And we started a fund because of that opportunity, but also because there are a lot of changes that venture has to kind of wrestle with in order to do a great job now. I mean, the bit that doesn't change is the great people you want to invest in. But there's a lot of thoughts about custody and early liquidity and price and so forth, and how to collaborate with a different set of stakeholders. So we want to get started early so we can do a good job of that.
Great. Ari?
So the technology adds a lot of value, as we all know. For things like security tokens, I think of it as just as more incremental. So the same way that equitization added value by adding divisibility, transferability. So for example, we have gold and commercial real estate as equities, as REITs or as ETFs as equity, and that adds value mostly by reducing friction. Tokenization is the next step there. What I'm more excited about, though, is tokenizing open source, where you fundamentally change the economic incentives. As some of the other speakers alluded to, we had this kind of 30-year dead zone in open source development, and we all hope this will fix it. To be a little bit controversial, I'll throw in kind of two things I'm spending a lot of time thinking about that are challenges in that. So one is tragedy of the commons, in the sense that we face this distinction right now between the more decentralized open source protocols that have less concentrated ownership like Bitcoin and heavily concentrated ownership like something like Ripple, and the latter have the incentive to market and the incentive to buy partnerships, and that's obviously going to be very successful for bootstrapping and building a network. So the balancing act between those two is I think, a primary focus, should be a primary focus of all of us as investors.
So how do you value companies and projects in this new world area? Stay with you in a world where there's lots of theory and the technology is not deployed. So how does this change the way that you value these companies?
Frankly, I have no idea. So we don't have a single successful data point. So like, quite literally, there's not a single working utility network, right? Ethereum is used for crowdfunding and CryptoKitties. There's not a single cryptocurrency that's in use in any meaningful scale, except as maybe store of value and maybe as payment rail. And even those, less than 75 million people around the world own any cryptocurrency at all. So we don't have a single testable data point to think about token economics. I have no idea. I think a lot of smart investors in the space are trying to apply is there some mechanism by which the token's likely to accrue the value from a useful network? What's the addressable market, kind of a traditional VC approach, and then team and tech. But most of these are like friends and family stage investments. We don't know the real economic model. We don't really know deployment, bootstrapping. We don't really know addressable market. So I think at this stage, from my perspective, it's very much an early stage VC mentality of, is there a massive addressable market, and do I think this team has some chance in hell of addressing it?
Okay, what do you think, Richard?
Yeah, I mean, I would echo that. Whilst I think it's great to start the conversations about fundamental ways of valuing tokens going forward, and obviously Chris and Viniski and others have done great work on that. I think when I see some of the people digging into those sort of mathematical approaches to doing it, that they kind of get, can't see the wood for the trees somewhat, because it's just there's not enough clarity on how this all will sort of play out. So I would absolutely echo that. This is a perfect fit for the quintessence of venture capital investing, which is like focusing on the team, the ability to obviously articulate great technology in white papers, to be able to think about the token economics and community management. Those are the things that we're looking very hard at. And it has always been the case, and is still the case. For example, in payments with Stripe. payments was meant to be something that was this market that was shrinking and it was a race to the bottom, but then Stripe is proving that you can create a different approach to it and a new market emerges. So that's something, that uncertainty is a common factor in venture, and you just have to wrestle and focus on the teams.
Brittany, you've made a couple of investments. Can you talk about your recent activity in the space and why and so on?
Yeah, so we're early stage investors, so we're used to kind of seeing no product, just a team, an idea come together to build something. So taking that into consideration is fine, but when you look at a lot of these blockchain companies, it's no longer you can just be a technologist building in one of these companies. You actually need to consider some of the other risks, like legal risk, regulatory risk, community economic risk. So you kind of have to have expertise in a lot more subject areas than you ever had to have before with a startup, because you could go raise a safe note tomorrow and it'd be very easy to know how your funding works, how the legal docs work. With this new ecosystem, it's all brand new. Even though there are things like the SAFT, which makes it a lot easier to issue tokens, that doesn't kind of relate back to the underlying issues of where are you setting up your entity, how are you being taxed, how are you thinking about employee equity when it's actually tokens, which has tax implications. So what we've found is that a lot of the projects we look at are non-starters for investments because they haven't set up the proper legal and regulatory structures to begin with. Because without that, it's very easy to be compromised or even overlook things like security, which, as we've seen with some projects, if you get hacked on day one after you have a huge ICO, that's going to lose a lot of value, not only in your holdings, but also in the faith of the project. So we think the bar is a lot higher, but hopefully with a lot of new companies getting funded, we'll get to a point where it'll be a lot easier.
But so do you think that small funds and new funds like what we have here have an advantage over the traditional VCs that have not been able to move so aggressively on investments?
Yeah. Especially because a lot of the dry powder that exists in venture capital cannot participate in a lot of these assets because their institutional investors say no, so they can't actually participate in a token sale. We're a smaller fund, and so we have the flexibility to be able to do that. But there's only a handful of firms that can actually legally purchase, given that their LPA agreements. So I think companies that are thinking about ICOing eventually may want to consider an equity route in the beginning, because traditional VCs will not be able to put money to work unless it's traditional equity. But that creates a lot of opportunity for players like us who can participate today in the current ICO models.
So why is everybody in Silicon Valley, Andy, jumping on the Telegram sale? There's been this belief that for some people that Silicon Valley has missed a little bit the crypto movement, and some of them now are trying to catch up. What do you think?
Yeah, it's a really interesting question, and just to represent other people's views here, because of course CoinList doesn't offer investment advice, I think the Telegram side of things is interesting. It goes to what some of the other panelists said earlier. These are early stage bets, and a lot of investors are looking at this and saying, this seems like a massive opportunity that Telegram is pitching here, and this team has shown an ability to execute on shipping product and building an operational product in the past. And they're looking at this and saying, a lot of these other teams in the space, they don't have that same level of confidence in their ability to do those things. Maybe this is a good bet. The TAM seems really big, the team seems really strong. There seems to be a path where some sort of value accrues to this token, at least in some sort of justifiable manner. It seems like a bet to take. And I think that's the approach a lot of people are taking there. It's not necessarily at the early stage about, is every detail of the technology worked out? Is the entire go-to-market plan worked out? Is the exact path to value creation worked out? Those things are unknowable. And just like an early stage venture, many of the best businesses, generational businesses, build their own markets. You can't tell how they're going to make money early on, or you can make predictions, but it ends up being wrong. And you can't tell exactly what the product's going to end up being. But if the team's strong and the market's right, then it's a good bet to make. And I think a lot of investors in Silicon Valley that, especially those that are coming in late to the token game and don't have really in-depth knowledge of how to evaluate the technical merits of these tokens, are instead taking that bet because it's a team and a market that seems really appealing.
So how do you make your decisions in CoinList in terms of what projects to take on and which ones not to take on?
There's a few layers to how we make the decision at CoinList. The first is that we're really looking for all the markers that every good investor is going to look at that was already mentioned. Is the team strong? Do we think the product has a compelling use case? Is the market interesting? And do they have smart people working on the project in different capacities? In terms of the technical process that we go through, we have a couple advisory committees, a technical advisory committee composed of some of the top developers in the space, and a market advisory committee composed of some of the top investors and other market luminaries in the space. They give us input and feedback on the process. And that's largely because we're looking at it and saying the people that are best at picking these projects are busy picking the projects. They're not going to come and work for us internally. And so let's rely on their input as part of the process. And once they get through that, there's kind of an extended internal diligence process, which includes, of course, looking at the legal and compliance aspects of the sale, making sure we're comfortable with how the sale is going to run. And that's, I think, an underrated piece of picking these sales right now. A lot of sales are at risk for running non-compliant sales or running things in a way that's going to cause lawsuits and other issues in the future. And so we dig really deep into how these sales are structured and if their structuring is going to put them in a good place in the future. And that's kind of the last stage of our diligence process. And at that point, we get comfortable with these sales. And
are you doing any deals in Europe, or is most of your activity in North America right now?
CoinList is focused on complying with US standards. So making sure that sales that are happening of securities in the United States are happening in a compliant manner. That said, a lot of European sales do US offerings of those products, and we are more than happy to help them out. But right now, we're focused on handling US offerings.
Okay, let's ask another question now, switching a little bit directions. Is the ICO the new IPO? And if yes, why and why not? So let's throw it out. Richard, do you want to start?
Well, my one answer is no, because it's really quite a different beast. I don't think the objective should be to set up an ICO where you raise an absolutely enormous amount of money when you're not at scale yet to be able to merit that. I think that the other reason why it's not the new IPO is that the IPO came with, and I had the misfortune to kind of be involved in one, comes up with an enormous amount of kind of overhead and cost and reporting and so forth. I think the promise of the ICO or the token sale is an interesting one. Let me step back a little bit. When we're talking to institutional investors about coming on board with us and being involved in this movement, they are frankly incredibly excited. I mean, I won't talk about specifics, but the government institutions and the most sort of conservative companies you can possibly imagine want to be part of this. And the interesting thing for me is when they then talk about the worst problem areas for them, the areas of compliance, of transparency on who's going to be holding the shares or the tokens. My view, and we had a little bit of a discussion about this yesterday, is that the promise of token sales and the crypto capital markets, or crypto asset markets, is to be able to do a much better job at all of those things at much lower cost than was ever done in the capital markets we have today. So whilst I see as an IPO as a very different beast, so that it shouldn't be viewed as the same thing, I do think that what's happening ultimately is going to kind of subsume all of today's capital markets, let's put it that way.
So I mean, there is undeniable new liquidity in the ICOs. So why is it not the new IPO? What do you think?
There's no great analogy, but if I had to draw one, it might be an IPO might be the equivalent of a Coinbase listing. So the idea of an IPO is the asset already existed. There was already fundraising rounds, right? You would seed Series A, Series B, and then the IPO is the exit for the private investors and the entry for the public investors. That kind of was mimicked a little bit with the pre-ICO, ICO rounds, but that distinction has really faded away, such that there is no real distinction there. So the equivalent might be you have a pre-ICO, ICO round that's kind of like seed, Series A, and then you have an exchange listing, and then that's a liquidity event. But even that's not great because IPO in the traditional markets is somewhat binary, right? It's like New York Stock Exchange or NASDAQ. It's a major liquidity event, whereas here we now have tiny exchanges. It's more of a spectrum, more of a scale. Yes, let me throw out one sentence on Telegram to kind of go back to that. I think I agree with everything Andy said. One thing I would add is it's a very safe, simple, obvious, traditional pitch, right? So explaining Blockstack to someone from traditional VC who doesn't see a pain point, who's like, I don't get it, Facebook's great, the internet's great, is hard. saying Telegram has a lot of users and we're going to monetize users is very easy. So Telegram is like an extremely traditional, pitch, which I think is one of the reasons it's been successful.
Yeah, I mean, I'd add one more thing to that. Talking to someone about who wanted to come into Telegram, and going back to the point of people, their view was just that Pavel Durov had proved that he was a Jedi, and they want to invest in Jedi. So again, they're looking for those kind of people. Sometimes it's down to that.
Brittany, I mean, do you not see the potential of earlier liquidity now in those new investments you've made?
Yeah, so I think it's an interesting question because as a venture capital firm, we traditionally hold on until the company fully exits. So prior, I was at Union Square Ventures, and most of our exits were by acquisition or IPO, and that could be anywhere 7 to 12 years into investing in a company. So you have a lot of longevity. And there's plenty of companies that have been very successful that struggled along the way. And I think if it were publicly available information, that might have a lot of people kind of ditch if that were a publicly traded stock. So I think as a venture investor, we will continue to be a long-term investor. But the success of the project means that we want other long-term investors who won't get spooked. If your CTO leaves 2 years into the project, is like your coin going to crash and everyone's going to abandon it? We want to be the people that are continuing to support, even though we know that there will be ups and downs along the way, because the long value is when these protocols actually get adopted everywhere. Like the success of Blockstack, I don't think we're going to really see the power of it for maybe 5, 10, 15 years. And that was kind of like the internet. It took almost 50 years to get us to where we are today from where the internet started. So I think being very long-term is important, but it's very hard to do that when you constantly see these ups and downs, and there will be huge price fluctuations.
So picking up on that topic, and let's dive a bit more into the decentralized aspect, because USV was a big proponent of network effects. So what are there any changes between how network effects happen and get realized in the traditional sense versus now in the decentralized ecosystem? What are some of these differences?
Yeah, so I think network effects in traditional companies, it was, you had big competitors, but you were aggregating all the value in a centralized way. With the decentralized system, what it promises is that anyone who doesn't agree with how things are working can literally fork the exact project and restart it. So those network effects may kind of get stronger for a project or an idea, but it doesn't mean that the initial team that built it is going to be the one that's really reaping that value over time. So that may mean you build the team, and then someone says, well, I'm going to make Blockstack Part 2, and I'm going to fork everything that exists, and we're going to use new principles, and our token will be more valuable than the original Blockstack token. So I think as an investor, we have to be hyper aware that just because we're early in believing in a project will be successful doesn't mean that those economics will stay in one silo. It could end up being 20 different sort of projects kind of take that over. So I think those network effects are definitely different.
Anybody else has a comment on the network effects aspect in decentralized networks?
So the forking is a critical point that I think we don't know yet. One way it could play out, so there can be kind of a greed motive of we're going to fork it to give ourselves tokens, but a very practical one is this is a commodity that works and I want to use it in my app, and so I'm going to fork it and use it for free. So, and how do you overcome that? So it would be big network effects. So I can't fork, if Blockstack is and IPFS are the backbone of the internet, I can't fork them just to use them personally. Whereas if it's a more narrow piece of code that does something that doesn't require lots and lots of users running it, then I think it's very likely to get forked. So something like, something like ZK Snark technology has no inherent value, right? It's open source, anyone can fork it, integrate it. So without some kind of established network effect. So if you're investing in an early stage project, then the question becomes, I think it's probably a race. We really don't know yet. We haven't seen examples of useful cryptocurrencies that are open source that then get forked, because really nothing's been useful yet. And I don't mean that in a derogatory sense, it's just everything's early stage. I don't mean to be super negative, it's just these are a lot of unknowns because of how early we are. But so if you're investing in a project that is a great team and a brilliant, brilliant technology, I think it's probably a race of can they entrench themselves, establish strong enough network effects such that the switching costs are high enough. By the time someone wants to fork it, at that point you have the equivalent of Bitcoin ATMs in every city and Bitcoin futures, that kind of thing.
Do you think that there are too many funds now coming into the system? Is that an issue?
No, so there were 15,000 traditional funds 13 years ago or so, and that was too many. So that number's come down to closer to 5,000 or 6,000. The headlines of 100 crypto hedge funds launched in the US are a bit exaggerated. A lot of those are one or two young people in an apartment managing the $3 million they made off ETH and then $1 million or $2 of friends and family money. The amount of capital controlled by professionals in cryptocurrency is probably well under 10% compared to 95% in traditional markets. So I actually think cryptocurrency would benefit from much, much more professionalization. And some of that will come from consolidation. So the best investors will earn returns, will get more capital from their investor base. But it's very healthy to have a lot of competition in that regard. I would hope there would be, right, I hope it's not 6 funds that just very quickly establish themselves as the only funds that are investable. I hope there's lots of competition.
I like your answer. Andy, do you think that, what impact does this have on your business?
The funds?
More funds, is that good?
I think it's good for everyone. I think, just to echo Ari's point, markets trend towards professionalization and trend towards passivity in investment. And we've seen this happen over and over again in every market traditionally that a new market is created, there's an explosion of inexperienced investors because at that point everyone is inexperienced. And as those investors become experienced, they professionalize, they raise capital, and they develop these markets in a more complete sense. And what we're aiming for is people that are allocating capital in intelligent and efficient manners. And the people that will be best at doing that are the professionals. So to Ari's point, I want to make sure everyone thinks about how crazy this difference is of the funds, the difference in professionalization between traditional markets and crypto markets. I agree with the assessment. 10% around there of money in crypto markets is controlled by professional investors. 10%. And if you look at the US capital markets, 95, different markets maybe as low as 90, but that's kind of the floor that you will see in well-structured markets. There is a long way to go before we reach that professionalization, and a lot of the volatility that we see day to day is as a result of a lack of professional investors in the space. So for CoinList, what we're looking for is, we want to open up access to as many people as we can to invest in these things, and we love retail investors. Retail investors should be excited about this technology, should do their diligence, and should invest in projects they're excited about. But at the end of the day, having investors with a long time horizon that are professionals in investing in projects because they believe in them and will stay with them, with the ups and downs, and making sure that they're allocating capital smartly is core to our business. So we certainly want to help those professional investors and see that increasing movement in the space is a good thing.
Great. We have 4 minutes left, so I'm going to ask you one question and then 2 other ones, but very, very short answers. What do you think of airdrops as a way to bootstrap a token-based network quickly? Good,
I like
bad?
them. So they're not necessarily the regulatory arbitrage that people think they are. It's unclear. They may still be securities, but I really like them as a fair coin context, wide distribution.
Okay. You like
it? Could be more targeted. I think there are. It depends on your token economics model and what you're trying to do. Are you focusing on consumers or larger stakeholders? That's a key factor. And then on that basis, to target more specifically than airdropping it to anybody with an Ethereum wallet.
Okay.
Yeah, I agree. Just getting airdrops into the people that you want using your network, because it's not valuable if they're just going to hold when you want actually people buying and spending. So the bigger community you can build by giving them airdrop, I think it's a good thing.
Yeah, I'm obsessed with airdrops recently, both for the cold start problem of networks and bootstrapping them, but also as an effective tool for corporate governance within a network. And I'll just, if you don't mind, just one idea really quickly that I think is very interesting is you can ask yourself what traditional corporate governance mechanisms, like a hostile takeover, look like in the crypto world. And we could say that if I wanted to take over a network, what I would do is I would fork the network, and then I would airdrop my new tokens to holders of that existing network if they burn their old tokens, if they send their old tokens to an unspendable address. So this is a concept that I'm taking this airdrop concept and using it as a tool to manage people's behaviors, incentives-drive behaviors, and you could use that as a way to try and move people off of one network onto a new one. So both for kind of the cold start problem as well as interesting mechanisms around how corporations or networks interact with each other, I think airdrops are a really powerful tool and probably understudied at this point.
Great. Now, really, really short answer, 20 seconds or less. 2 questions in one. What are you the most worried about and most excited about? Worry, excitement.
Worried, I hate regulatory gray areas because they encourage bad actors. They force out the good ones, and we're kind of in that zone in the US right now. The best people who are really, really worried about doing things in a regulatory compliant way just don't ICO right now. And most excited is the basic idea of tokenizing open source, kind of what we're all here for.
Great.
Look, same answer again, but also super excited about what I mentioned before was, projects like Harbor and Mougayar and whatever, being able to automate the approach to kind of compliance and regulation and so forth even better than we have today. But, fearful that we won't have enough, builders, doers, makers, and we'll have too many folks like us just looking at investing. We need to continue to emphasize that, even if I do believe that a kind of Cambrian explosion in the number of funds is absolutely required if we're going to find kind of fund market fit, because I think we've still got a long way to go.
Brittany?
Yeah, so I think having good use cases for the blockchain, hopefully those will outpace any of the bad or nefarious things, because I think that will cause regulation to come in a lot sooner. So obviously regulation, especially in the US, it may mean that we can't play in the market if we get shut out too early. So I think that's a concern. I'm super excited about all the projects being built and just how it's attracting a lot of new entrepreneurs to come into the space, as well as work on existing projects and being able to be rewarded for being early and being helpful. So my hope is that we don't get too many projects that fragment too many smart people, instead having really solid projects that get a lot of momentum and have more people collaborate on those being successful than just ICOing any idea that they have.
Andy?
Worried that the low-quality projects and the scammy projects will overwhelm the market, either from a regulatory perspective or just from a market perception perspective. So working to fight against that, and excited, to take a page out of Steve Ballmer's book, developers, developers, developers. That's all we care about, and making sure this technology happens.
On that note, I'm going to leave you with another note, which is a quote from Bob Dylan's song, the times are changing, because we're really in the early days, and it ends the song like this: the slow one now will later be fast, as the present now will later be past. So on that note, this is really what the future is all about. Thanks very much to the panelists, and on to the next one.
Thank you.